Welcome back to The Explainer. Today, we're cutting straight through all the market noise to objectively unpack PetroChina's August 20th, 2026 half-year financials. Look, there's a ton of speculation swirling around one of Asia's absolute biggest integrated energy giants right now. But today, we're skipping the rumors and we are focusing strictly on the verified data.
So, let's dive right into the core tensions surrounding shares 0857 in Hong Kong. Is this energy titan a value trap, or is it a dividend fortress for your portfolio? Honestly, it's the multi-billion-dollar question that everyone is debating right now, and the real answer is buried deep within their latest financial disclosures.
Here's our roadmap for today. 1. The financial reality check. 2. The green hydrogen pivot. 3. Market action and valuations. 4. Macro and geopolitical risks. And finally, number 5, the final investor verdict. Section 1. The financial reality check. Beyond the headline beat. Let's start with the immediate past and peel back the layers on that latest financial filing. The headline net profit, it came in at a massive 89.4 billion renminbi. To put that into perspective, that translates to roughly 12.5 billion US dollars, which gives us a really solid 6.2% year-on-year beat. Now, on the surface, that paints a picture of robust health. But you know how it goes, a headline number only tells us what happened, it doesn't tell us exactly how it happened. And this is where things get really interesting, because there is a huge internal tectonic shift happening inside this business. Natural gas is absolutely killing it. It's the star performer here. Output surged 4.5% to 2.78 trillion cubic feet, and their China-Russia East Route pipeline is now pumping out a full 38 billion cubic meters of annual capacity. And because PetroChina secures this gas at discounted rates, this one segment alone drove almost 70% of their entire profit growth. But flip the coin, and refining is really struggling. Margins have contracted down to just 4.1%. Why? Well, China's massive domestic electric vehicle boom is permanently destroying gasoline demand, leaving the company stuck with a structural oversupply.
And that dynamic brilliantly illustrates exactly why income investors are anchoring right here, despite those rough refining headwinds. The company declared an interim dividend of 22 cents renminbi, which pushes PetroChina's forward yield up to roughly 7%. I mean, that nearly triples the yield you would get from Chinese government bonds right now. It's a pretty massive incentive for us to hold.
Section 2. The green hydrogen pivot, a 32 billion RMB bet.
So let's look to the future and address the giant elephant in the room when it comes to their capital allocation. They just approved a 32.6 billion renminbi Inner Mongolia wind solar hydrogen hub. That is huge. This single project is going to eat up 12% of their entire 2026 capital budget. We're talking about the largest non-oil expenditure in PetroChina's entire history. It's a massive pivot, and frankly, it is completely polarizing the investment community right now.
So why the big divide? Well, let's look at both sides. On the bullish side, advocates see a brilliant long-term play here. They think PetroChina can convert their massive existing pipeline network to transport green hydrogen, basically building a monopoly on clean fuel distribution up in northern China. If carbon prices hit 100 renminbi per ton by 2028 like some predict, this becomes a super high-margin, recession-proof cash machine. But on the flip side, the bears are calling this a straight-up short-term cash incinerator. They argue that 32 billion could have easily gone straight to share buybacks. And because of this heavy green focus, their crude oil output growth actually dragged down to a really stagnant 1.8% year-on-year.
So for right now, the objective reality is this. The market is treating this state-mandated green transition purely as a drag on free cash flow. It's basically being viewed as the price of doing business. It's so important that we view this green CapEx as a 2028 to 2030 long-term play, rather than some near-term catalyst that's going to magically move the needle in 2026.
Section 3. Market action and valuations, the institutional tug-of-war.
With all those fundamentals laid out, let's see how the market is actually pricing this thing. Right now, PetroChina is trading at 5.8 times forward earnings and just 0.68 times price to book. When you contrast that with global majors out there like Exxon, which sits at over 2 times book, PetroChina looks undeniably incredibly cheap. But as any seasoned investor will tell you, cheap on a spreadsheet doesn't always translate to safe in the real world.
Which brings us to the institutional flows we've been tracking. And wow, we are seeing a fierce tug-of-war here. On one side of the rope, mainland Chinese investors have pumped a massive 1.2 billion Hong Kong dollars in net inflows via the Stock Connect program just since the earnings dropped. But on the flip side, international hedge funds are actively trimming their positions, taking that capital right out of PetroChina and rotating it heavily into U.S. tech stocks.
So where does that leave the technicals for the active traders out there? Well, expect the stock to trade in a pretty tight range. Your immediate floor is the 200-day moving average support, sitting right at 680 Hong Kong dollars. The ceiling? That's your resistance, at 750. And to break out above that 750 mark, the market is going to need a major catalyst, specifically a surprise OPEC Plus production cut, which, as of right now, is absolutely not priced in.
Section 4. Macro and geopolitical risks. External threats.
Before we land on our final conclusion, we've got to take a neutral step back and assess the external macro risks that could just completely undo this whole financial thesis. These are the big overhangs completely outside of the company's control. First up is oil price sensitivity. For every single $1 drop in Brent crude, PetroChina loses roughly 2.5 billion renminbi in net profit. Think about that for a second. If U.S. Fed policies happen to trigger a fourth-quarter recession, and that pushes Brent down from its current $82 to, say, $72, the company takes a staggering 25 billion renminbi hit to their second-half earnings. And guys, that is before we even factor in the explicit warnings right there in their own filings about cross-border payment delays for their Russian gas imports due to ongoing geopolitical complexities.
Section 5. The final investor verdict. Segmented strategy.
Bringing this all together into some actionable takeaways for us, we are officially classifying PetroChina as a defensive hold. But listen, it really depends on your specific portfolio strategy. If you're a growth investor, you should probably just pass on this one. The crude output growth is just way too anemic, at 1.8% to drive any meaningful capital appreciation. However, if you are an income or retirement investor, totally different story. You can safely hold or even accumulate on dips below 6.90 Hong Kong dollars just to lock in that juicy 7% yield while you wait for that whole green hydrogen story to mature.
And hey, if you're sitting there worrying about that yield suddenly disappearing, the data actually points to a lot of stability. That dividend looks highly secure for at least the next 2 years. It's fully covered by operating cash flow, and they're boasting a really manageable payout ratio of just 45%. Honestly, that's a surprisingly conservative cushion for an energy major of this size. They definitely have the cash generation to sustain it.
I'm going to leave you with this one critical metric to watch like a hawk over the next 30 days. Write this down, 1.6 million tons. If their daily domestic refining sales break below that specific threshold, it tells us that EV demand destruction is accelerating way faster than anyone on Wall Street anticipates. So, will the green hydrogen pivot save them in time, or is the EV revolution going to drain the pump first? Keep a really close eye on that number because it's going to dictate PetroChina's next major move. Thanks for hanging out with me on this explainer, and keep learning out there.